because there too about 0.75%. The mid cap and the small caps, wherein the volumes were a bit higher today. So 1.5% down for the mid cap index, and the small cap index too about 1.5%. The volumes are a bit high at the broader end of the spectrum on specific stocks, and that's the worry. Now, Harsh will highlight all of that, but let me pull up the large caps first and show you what's moving and what's not. Remember, it was even Stevens at the start. Now it's a large envelope of red, and across the board, from a Power Grid to Apollo to a Bajaj Auto, clearly auto is under pressure. Asian Paints is down, Tata Steel is down, so it's varied, and on a day like this you would probably expect that to be the case. What's kind of withstood the pressure? Hardly anything. A bit of a defensive bet there. Insurance, which was active yesterday, to an extent HUL and IT. So that's about it. But a classic day when there is some serious selling that's happening, more so at the broader end of the spectrum, but the large caps are kind of exemplifying the flavor of the mood of the market. But mid caps being taken to the cleaners.
Absolutely. Let's look at the advanced decline, Niraj, because it's been interesting all the way since morning. We saw a sharp reversal in advanced decline, and that has plateaued after that reversal early on in the day. This is what I'm talking about, roughly, around 11ish, and post that it's been pretty much flat. So the advanced decline firmly in favor of the declines. The breadth of the market very, very weak amongst all indices, mid, large. Nobody's really been spared there. Let me quickly point out to a few names. A few names have been in focus over the last few weeks, in fact. Let me first start off with something like a Vodafone Idea. It's probably stock of the day, and along with it, let me also pull up something like a Z and a Paytm. All three of them languishing in trade, 12% lower for Vodafone, 5% lower for both Z as well as Paytm. Those have been in focus since a while. On a poor day of trade, those are doing relatively even worse. Let's look at something like a Torrent Power on the back of news. That one also has slipped 4+%. Looking at a Texmaco Rail, which is also sharply lower. But outside of that, I want to quickly point out to the OMC pack, HPCL, BPCL, IOCL. Those three also not doing so well. A Nuvama note suggesting some amount of bearishness, some amount of or indicating that probably some of these stocks have now reached their fair valuations. Also, the other one, Indostar, GTND, we did have those. Those are among the gainers in a very, very tough day of trade. There you go, 1% and 2.8% high. Indostar Capital, obviously, all the way to my left. What you're largely seeing on Indostar is because of the QIP and rather the private placement, and what you're seeing is 450 odd crore being raised, and that's why the stock is a buzz. You have the likes of a Dream Folks and an Avas, both of those buzzing on the back of favorable brokerage notes. Avas not really buzzing, but 1% high on a tough day of trade. Not something that you would want to complain about, right, Niraj?
Not at all, yeah. Buzzing seemed to be a rare word today for sure. Let's get in our experts to try and understand what to do in a scenario like this. Akshay Bhagwat, Senior VP JM Financial on the derivatives and the charts, and on the fundamentals, Hemang Jani joining in as well. Gentlemen, thanks so much for taking the time out and being with us, both of you. Akshay, can I start off with the trade pattern today? Is this more so the selling at the broader end of the spectrum, because that was the more resilient part the last few days? How are you looking at the charts for the basic indices? And then couple that up with your stock recommendations as well.
Good afternoon, Niraj.
Very good afternoon.
Today there has been a good sell-off in the market, but my belief is this is more to do with the expiry-related action. Now, 22,000 is the pivotal zone. This is the point where a lot of positioning was seen a day prior in the puts. So this is more about shaking off the put writers for the time being, as I see it. Currently, there is a lot of open interest still, both in calls and puts now. And considering the fact that tomorrow is the expiry for the Nifty, all this volatility and momentum is about the battle as to whether 22K holds or not. As I see, both the calls and puts are sold together to play tomorrow's expiry, so things are likely to be volatile. But if you're seeing from a directional perspective, then minimum criteria I would give is that 22,100 now stands out as a key resistance if you are placing a trade for tomorrow or today. Till 22,100, the index trades below it, there is a good chance that market might try to get below the 22K and head for the recent lows, which was 21,850. So a slight negative tinge on the index, but it's more about the options action for tomorrow's weekly expiry. As far as the couple of trades which I have for recommending to the viewers, first would be Tata Motors, which has a very strong setup here. And my belief is that longs have been rolled to the next March series. The broader chart setup is positive on the charts. So I would be a buyer in Tata Motors on dips if I get around 955, 950 odd levels. So Tata Motors I would recommend to buy at the current rates. Keep a stop loss of roughly around 942 on this trade, and around 1000 odd levels can be the target if the momentum resumes. And the second trade here is in Asian Paints, which has a negative or a bearish setup, clearly broken down the supports of 2900, heading for 2700. So a very strong negative build up on short side, and I believe 2700 is where you should target Asian Paints from the short term perspective, with a stop loss of around 2910 on the upside.
Well, a short call on Asian Paints, and remember the last few days it's had a bit of a rough ride as well, so that's to be kept in mind. Opening thoughts from Himang Jani before we address the stock of the day. Himang, a rough ride. Akshay reckons that this is probably due to expiry-led issues. How are you on the markets currently? Constructive, or would you believe lower levels coming?
Good afternoon, Niraj. Two things. One is that, of course, expiry will have its own bearing, and you know, on days you see the index holding out with the broader market going through a bit of a correction. But today is a day where both the large caps and index as well as the broader market is going through a bit of a correction. Also, we have to reckon that since we will be approaching March, you know, a lot of HNIs and you know, many people try to you know, do less of activity and do a little bit of you know, accounting related stuff. So that also can have some impact. My sense is that the market may go through a little bit of a dull phase for maybe some more time. But I do not see a reason for a deeper correction given the global setup, given the fact that earnings season by and large has been quite good. So there is a lot of appetite, a lot of interest in the market, but maybe this is just a phase where you will see a little bit of correction and consolidation.
Okay. Well, stay on, gentlemen. We need to get your views on what is arguably the stock of the day, and that is Vodafone Idea, or the event of the last 24 hours, because the company's approved a fundraise of up to 20,000 crores via equity, additional maybe 25,000 crores via debt. But this brings into the picture Vodafone Idea, as well as some of the other allied players like Airtel and Indus Tower. Smriti is waiting by to tell us the highlights of this and the longer-term implications, if you will, of what the eventual outcome could be. Smriti, good afternoon.
Good afternoon. Well, yes, late last evening, Vodafone Idea announced a fundraise. So in total, they're going to raise 45,000 crores, out of which 20,000 crores will be through equity. Now, that's the announcement that happened last night. They're going to complete the fundraising in the first quarter of FY25. That's the timeline that the company has given itself. The funds will be invested towards expansion of 4G and rollout of 5G. In the earnings call, in the third quarter earnings call, they mentioned that they'll take 7 to 8 months to roll out 5G from the fundraise. So probably by the end of FY25, we can see 5G with Vodafone Idea if all goes well. Next, the promoter is going to participate in the fundraise. Now, the promoter has previously committed 2,000 crores that they will put in the company if need be. So they will participate. It is highly likely that Aditya Birla Group will put in that money through this fundraise into the company. But the question is, are they going to go higher? So that's something we'll have to watch out for. Other than that, there's going to be an EGM on 2nd April where they'll ask shareholders to approve this fundraising that's going to happen. While it's unclear how this fundraising will happen, they haven't mentioned the mode by which they're going to go through with this. Is it going to be a QIP, a preference allotment, or anything else? But there are certain key monitorables that we should watch out for. First is, will there be a big investor coming in and that'll back the company because they really need it. Out of that 20,000 crore, we know that 20,000 will be pitched by Aditya Birla Group, but what about the rest of it? The next is, will the network get better plus 5G launch help retain subscribers? Will that be the case? Now, that will happen only if they're able to launch 5G. So the timelines are need to be pretty strictly done. If that happens, then only they're going to see 5G subscribers. Let's also talk about what will be the cost of funds. Now, this is the important part. If you look at the debt of the company, it has a gross debt of over 2.14 lakh crores. In FY25, they are due to pay 5,400 crores, and in FY26, they're due to pay 30,000 crores. So in total, that's a 35,000 crore debt that needs to be paid in the next 2 years itself. And if you compare it with the raise, 45,000 crores, out of which 25,000 is debt, are we saying that debt refinancing is what's going to happen with the company? So the cost of funds is likely to be high in this case. The last is, will the government agree to extend timelines in AGR? Now, from FY26, the moratorium on these AGR dues will be lifted and the company will have to shell out 28,000 crores towards the government. However, will the government step in and extend those timelines is the question that we need to watch out for.
I think that that question, Smriti, around the big investor, because if the promoter is going to put in 2,000 crores, there's a large equity raise that needs to come in from other investors.
Yes, definitely. It needs to be much, much bigger. So is it going to be multiple investors that they have identified? That we're going to see in the next couple of months.
Okay. We'll wait and watch. Thanks a lot for that, Smriti. So, well, that's Vodafone Idea. Hemang, coming on this one, I mean, it's not just on Vodafone Idea, but the implications of a successful fundraise on Indus Tower, on Bharti Airtel, and on Vodafone Idea itself.
Yeah, so Niraj, I think for the last about 4 to 6 quarters, we've been hearing about the fundraising plans, and finally, board approval has come through, and we just need to see what kind of structure do they come up with. This, if they are able to raise a meaningful amount of money by way of both equity and debt, about 450 billion rupees. Surely there is going to be some sort of rub-off in terms of the perception that people have about the company, and you could definitely see a bit of a re-rating. However, given the current balance sheet structure of the company and post-moratorium, the gap between the EBITDA and the obligation that they have will be quite steep. So should not get too excited. Maybe it will give you a little bit of a, maybe 10, 12, 15% kind of an uptick, but not looking at this as a permanent kind of a solution for the woes that Vodafone has.
Hemang, if I can also come in, try and understand, you expect a larger investor to participate in a big way in this, because without that, seems like a tricky one to be in.
Only given the size of the requirement that they have, both equity and debt component would be somewhere around 450 billion, which is not a small amount. So in what composition, they are able to do it, whether promoter is able to do X and you have a large investor, because if you do a small fundraise or, other people are not able to contribute to the extent of the overall requirement, surely it's going to be a tough, tall order for them.
Sure, point taken, Hemang. I also want to try and understand from our technical analyst, Akshay, give us your views with regard to how this one looks on charts, because we've seen plenty of volatility on this counter.
Well, see, Vodafone Idea today, as it trades right now, is at its support zone. The support is the recent swing low, which we saw a few trading sessions back somewhere in the first week of February. That's around 13.7. So a crucial support, but one thing is clear that the entire momentum build-up, which we were seeing in momentum in Vodafone Idea, has been out today. So it will take time to regain its lost glory again. It will consolidate maybe if it's hold on to the support. So if anyone has a position, you need to keep a strict stop loss of around 12.5, because the momentum is killed. To regain this, it's going to take a lot of time. The broader chart structure is getting into a sideways consolidative action now. the lower end of the range being 13 and upper end of the range possibly being around 17. So more of a no trading zone action in Vodafone. And honestly, I would not advise anyone to go for a fresh buying bet here. It's about keeping a stop loss and to try to take an exit at the best possible rate.
What about Indus Towers, Akshay?
Yeah, Indus Tower comparatively is better placed than the chart of Vodafone Idea here. It has given a strong breakout a couple of days back. The weekly charts have seen a breakout at 228, and that's a very strong development in the stock. Today also, the day trading parameters are very positive. The support is 233, and the expectation is that from the short-term scenario, you might see the stock heading for upside levels still around 260 to 265. So that's a trading target. If it resumes its upside journey, then positional targets can go as high as 290. So a positive view on Indus Towers, continue to hold or buy, and the view continues positive till it trades about 225.
Sure. Hemang, any views you have within telecom? Bharti Airtel, there have been a couple of favorable notes coming through. There's some bit of positivity on that counter even today, despite all that's happening in the market. As well as an Indus Towers. Anything in telecom that you're liking at this point? Not too many options.
Yeah, I agree. Surely from let's say if you really want to commit a serious sum of money and large allocation is what you're looking at, then Bharti is a go-to stock without any doubt. And, given the trend on the ARPUs and the way company has kind of given indication of what could be the trajectory for ARPU and, overall earnings, surely that will be the favorite stock that one can really look at. Indus Tower has done pretty well. To some extent, there's a little bit of correlation between the Idea Vodafone and Indus Tower because of the current structure. And we do think that if, Idea is able to raise money and there is a comfort that people get, it will also reflect in the sentiment towards Indus Tower. And the stock has done so very well in the last, let's say, few months. I think maybe a case of another maybe 12-15% kind of an upside given the traction and the momentum which is there. But I would not get too aggressive on Indus Tower in terms of new money because the stock has already run up and this event of fundraise is, known to everybody. So don't expect much of a move. But yes, some more upside is pretty much possible on Indus Tower.
Okay, we'll watch out for some of these as well. Hemang, thanks for taking the time out and being with us today on the show. Really appreciate your time this afternoon. That's the view from Hemang Jani. Just before we take that break, look at the Nifty 500 and that while stocks on both ends are there, but just the list of losers on the NSE 500 is just so large, with Vodafone being the top draw, yes, but everything from a PNC Infratech, which was up yesterday, to a Motilal Oswal, which was up yesterday, have taken a sharp knock in the session. On the flip side, Jindal Saw at 18% is really packing a serious punch. We're back from a break. Talk to transformers and rectifiers as they win a order and guide to some fairly strong growth for the next 2 years. Well, thanks for joining back on India Market Close. We are going to be in conversation with Mr. Jitendra Mamtora. He's Chairman and Whole-Time Director of Transformers and Rectifiers. They've recently gotten an order worth slightly over 200 crores or 225 crores, but the 232 crores to be precise from Power Grid, the contract to be executed within the next 21 months. But what is interesting about Transformers and Rectifiers is the growth targets that they've laid out for themselves. Mr. Mamtora, thanks so much for taking the time out and speaking with us, sir. Give us a sense of how do you expect the next 12 to 18 months to be like? Because when I look at what you're targeting over the next 2 financial years, it's a very impressive number in terms of growth relative to what has been clocked in the past.
See, if you look at the order position today, which is around 2,800 crores, which had never been in the past. This kind of order book and our ability to deliver this will be the main challenge. We have lined up to increase our capacity not by putting in extra infrastructure, but also by reducing the cycle time, which will give us a mileage and the extra capacity. In the past, we used to take something like, for building a large transformer, we used to take 40 days. Now it is reduced to 30 days, and our target is to reduce it to 23 days. So this also will give us the extra capacity in the plant. Beside, our earlier plan for manufacturing the smaller size of power transformers up to 100 MVA, we are expanding the capacity there by another 12,000 MVA. So this will all, and that is going to happen in next 6 months. Beside that, the challenges, as I can see that, it will be the supply of the raw material, including some of the fabricated tanks and all that as per our design. We have our own capacity to manufacture something like 300 tons per month. We are trying to increase it by putting up a greenfield plant for doing something like more than 2,000 tons, not only for us, but for the other peers as well. Because there are shortage of the transformer tanks. We are also struggling, but we have managed for another 6 to 8 months. Beyond that, we'll have to work very hard because everybody is occupied and the prices are going up for such things. So we are absolutely in line with our requirement by putting up extra facilities for manufacturing transformer tanks, for manufacturing radiators. And beside that, we have a plan to manufacture some other components which are very critical in the transformer manufacturing. So that also we want to build our own. So these are the major thing which will give us the mileage. Now, price is not the criteria. It is only the deliverables. If we can deliver the transformers in time, sky is the limit for us. Anybody, who is in the field of manufacturing large transformers, they are fully booked. So price, nobody is talking about the price. People are talking about the deliverables.
Sure.
So, in fact, what has happened is, the Chinese companies are also pressurizing the government to include them for the supply, which they are not eligible today.
Sure.
So they are working hard. We are also working hard that they don't come and increase the competition unnecessarily.
I take your point, sir. I completely take your point. Now, with regard to your order book, you have around 3,000 crore worth of order book, rather 2,500 plus the 300 odd crore you've won right now. And you've given a guidance for 3,000 crore of revenue in FY25.
Yeah.
So that essentially means you're doubling up with regard to your revenue current year versus next year, trailing 12 months versus FY25.
See,
How?
when I tell you, I mean, there is a rider there. What has happened is the transformer prices are going up. So, the prices have gone up by at least 15 to 20% in the recent time. So if you talk about it, my turnover last year was 1,300 crores. So 20% if you add, it comes to 1,600 crores, just like that, without doing anything, just on the price corrections. And then, as I said, whatever orders we have today are, like multiple units. It's not one unit, 2 units like that. It is multiple units. So the production cycle also will reduce. The stage inspections will also be reduced. So everything is going to take lesser time than what we used to take. Earlier, we used to talk about 1 transformer, 2 transformers. Now we are going to build 6 transformers at a time of the same capacity, so that my production line efficiency improves, and my raw material supplies also becomes very standardized. So the wastage also will reduce. Inventory will reduce because we are making identical transformers at a time.
Sir,
so this is going to
No, I get your point. So you're saying that you are able to reduce the lead time for manufacture of transformers as well, and therefore, is it safe to assume that 3,000 crores should be an easy task to achieve? Because I heard you use the term rider.
I think there is something which is missing. 3,000 crores we said in the year after, not next year, but year after.
FY26, you mean?
Yeah, that's right.
Okay,
that's right.
We stand corrected. So thank you for putting that out. So it's FY26.
Because we don't want to. We see
Yeah.
the kind of orders which we are seeing.
Yeah.
It can be 3,000, but I'm not saying today 3,000 crores because nothing
Fair
has
call.
and that kind of production line which we want to install.
Got it, sir.
Yeah, so it's
Completely agree. I have one more question, Mr. Mamtora, and which is that this execution of the order book that you do, and I heard you say that pricing may not even be an issue because there is just a lack of quality transformer manufacturers. So I'm trying to understand, do you reckon that your operational metrics and your margins can improve? Because you clocked in 10% in a quarter after a really long time in the December quarter. Can you do a double-digit margin for the next 3-4 quarters, or is that a difficult task?
No. It is, as I said, the prices have gone up. So the margins are going to go up. Nevertheless, the raw material prices are also not going up. I mean, the commodity prices, we don't have any control on the commodity prices. But what has happened is our suppliers have increased their margins also at the same time, right? So it is not difficult to get the margins what we used to have in the past, and whatever the industry standard is there, we are going to get it. There is no, if you just see the Crompton, who was not in the field, now they have entered the field, and their profit before tax is 13-14%. If that is the case, everything will improve, and the margins which you are talking about, EBIT margins, EBIT margins is one thing, and profit before tax is another thing. We are trying to reduce we have already infused 120 crores of fresh capital in the business by way of issuing fresh shares, preferential shares. So our interest rate is also going to come down. So maybe, EBIT margins will definitely cross double digit. But apart from that, my profit before tax will also increase substantially. Because if you see today, our interest cost, if you see all last 4 or 5 years balance sheet, was around 5%. It's hovering around 5%. So 5% will be reduced to 2.5% to 3%. So 2% bottom line will just go up. That's one thing. And beside that, the prices, recent increase in the prices of the transformers, the MSR ratios, material to sales ratio, has improved quite a bit. Quite a bit.
Yes, sir.
Yeah.
So take your point. Just one thing I wanted to quickly understand. So no doubt with regard to the kind of orders flowing in, therefore your margins ought to go up, but you are also suggesting raw material, or rather your vendors are charging a higher or charging a premium. So where should your margins settle? Would it be fair to say You've guided for 18 to 19. Would it be fair to say that that will happen in Q2 of FY25? Is there a timing to it?
I don't want to comment on that. But see, the increase in the prices by the vendors is not on the commodity. It is on the process charges which we are talking about. Like I'll give you an example, like copper. Copper, we are buying it around 800 rupees. So now the fabrication charges for that is 7 to 8 rupees. So they have gone to 12 rupees. So the overall difference will not be that much. Fabrication has, of course, that is the worry, that fabrication has gone from 120 rupees to 150, 160 rupees. So that is a concern. But we are having our own fabrication unit, and we are adding up more capacity, not for ourselves, also for the exports. Besides that, we are putting up a automatic line for manufacturing radiators, not only for us, which will double our capacity. It's a vertical, but that's 51% owned by us. There's a partner there. So we are putting up a automatic line for that. That line is coming and will be commissioned by mid of April. So that will also give us the mileage and also reduce our inventory.
Time, but just very quickly. So you were saying you don't want to comment on it, but you will reach double-digit margins and higher margins in the current calendar, right? Quick 20-second answer. By all means. Got it, sir. Got it. Thank you so much. All the best for the same.
Thank you. Thank you very much.
Right, that's transformers and rectifiers today, in line with all the other stocks also down in trade, but very aggressive guidance. Not FY25 stand corrected. It's FY26 is when they touch 3,000 crores from 1,300, 1,350 crores in FY23 or TTM also, roughly the same numbers. Some flashes on your screen before we take that break. This is from Bloomberg. KKR is set to mull selling stake in JB Chemicals. They're calling JB Pharma, but yeah, that is it. JB Chemicals and Pharmaceuticals, the stock has taken a bit of a nosedive as a result of that. Effectively, large supply coming in should make stocks nervous. Maybe due course of the day, be interesting to see what the stock does. Akshay Bhagwat is still with us. We need to slip into a break though. On the other side of the break, we'll talk about some of these with him, get in Deven Choksi on the fundamental side as well.
Welcome back. You're watching India Market Close here on NDTV Profit. I have with me Akshay Bhagwat, who's the Senior VP at JM Financial. Akshay, thanks for staying with us. Now, we spoke with the management of transformers and rectifiers. I want to pick up from where we left off on charts with regard to this one. What's the sense that you're getting? What should one do?
Well, if you look at this chart, broadly the chart structure is still strong in transformers and rectifiers. There is a support base at the level of 335. So it's about the support holding on. Till then, we maintain a bullish view on the stock from trading perspective. The upside can be as good as 375 to 390 on a short-term to medium-term perspective. So continue to hold longs and keep a stop loss below 332 in case you have any long bets on it.
Should stop loss below 332 in case of longs. Thanks for that. I also want to welcome on board Deven Choksi, Managing Director, KR Choksi Investment Managers, on to India Market Close. Welcome and good afternoon, Deven. Deven, we were just a short while back speaking to the management of transformers and rectifiers. Now this entire power space seems to be heating up very, very well. He was talking about how pricing has shot up, capacities are at peak level, and both on the vendor side as well as on the client side, people are willing to pay and charging top dollar. Now, with regard to the power space itself, how would some of these transformer companies evolve? Every day we are seeing Power Grid make or rather churn out orders. What's your sense in this space? What's the best play?
Yeah, good afternoon. Well, I think we couldn't have agreed more with the words that you have expressed about the potential that we are seeing, particularly in reference the transformer rectifier that you're talking about. The recent announcement suggests that I think they are having the order book for completion of about 2,600 crores and 10,000 crore more orders in pipeline. Now, this kind of situations are exceptional situations for the companies which are relatively smaller companies. The reason very obvious and clear that India is investing big time into the infrastructure, particularly the generation and distribution infrastructure of power. Earlier, if the order was to go for the thermal power, then came the nuclear power, and now today the renewable power. So certainly, I think the requirements are increasing. On the other side, the investment getting into the system through the PLI scheme is also asking for the industrial transformers in particular. As far as the capacity requirement goes, I think they all need, the transformers big time. Railways being the third main sector where probably you are seeing the higher amount of order inflow coming in because of the government's thrust on railways and putting in significant amount of money behind the electrification of tracks and all. So all in all put together, I think this industry is today finding themselves into one of the best times. The challenge that this industry definitely faces is about the longer cycle of execution of orders. From receiving the order to the execution, I think it normally takes a little longer gap in the execution. So working process inventory and the working capital requirement with every dollar or every rupee of order that they receive significantly goes up. The challenge for the analyst and for the fund manager would be to keep ensuring that I think this particular equation of requirement of working capital do not derail the entire business prospects, which otherwise I think are appearing strong. So on your question of I think which companies I think one should be looking at, I would think that I think the stronger balance sheet would make more sense because I think they would be in a better position to bargain their fund cost as well. So in a way, I think one would like to stay with the stronger companies in this particular space, though mid-size and small-size companies are equally having better prospects, as long as I think they manage the funds for the working capital purpose.
Point taken, sir, but I also want to try and get your view, and maybe in 20 to 30 seconds, we've seen a fantastic run-up from pretty much all counters in this space. Where does one seek value at this point?
You can't chase value at this point of time. I think I am very obvious and clear on this subject. The fact is that I think the markets have started discounting FY26 already now. And that is what is, I think, also a cause for concern. Some of the mid-sized, small-sized companies may not have the consistent performance to report, I think, on a quarter-over-quarter basis. So over a longer period of time, I think they would end up executing their books. But at the same time, on a quarter-over-quarter basis, I think they may disappoint because of the very nature of the business. And at such point of time, if the valuations are lofty, then possibly market would tend to correct at such point of time on the given results. So I would not chase, I think, the market price. I would probably wait for the values to come down to make more appealing sense for investing in the portfolio.
Wait and watch. That's how Deven is going to play this. Okay, I have Agam standing by. Mandatory F&O cues for today as we are in the last half an hour of trade. Agam, what is it that you're making of the trade today?
Right, Harsh, tomorrow's expiry has just become very, very tricky considering the way markets have moved today. And it certainly has seen a spike in volatility. The underlying is down by around 1%. We have lost out at the moment around at the 22,000 mark. And along with that, we are in fact seeing a considerable increase in the March futures towards what looks like at the moment shorts building into the system. When it comes to the Bank Nifty as well, that is also where we are seeing a 1.3% drop, and we are well below the mark of 46,000. Remember, that's where we did see a significant amount of support over the previous few sessions, and we are seeing an increase in the March futures. What about your options market? Now, since the Nifty has fallen, it is only obvious that we would continue to see a considerable amount of increase in calls. Now, that also means that a lot of these traders are writing calls around 22,200, 22,100 levels as well. And, they're also taking, advantage of the fact that the Nifty is now below the mark of 22,000. Moving on to the Bank Nifty, and this is again going to be a very interesting one considering of course, this is your overall open interest distribution for the Nifty. And we continue to see your put as the one with the max OI, but it will most likely change in the next 15-20 minutes. Moving on to the Bank Nifty, that's where once again we continue to see a little more addition towards the calls and call side of things around 46,500. And finally, coming down to stocks, want to keep an eye on something like a Jindal Steel, along with Coal India, M&M and GAIL, all of them looking at shorts, except for Dabur, which is looking at longs. And in terms of stocks, which is seeing unwinding, and there the list will be a little larger, where we have seen longs unwinding in Syngene, Voltas, as well as Wipro. A lot of slabs in Berger Paints, on the other hand, looking at about short covering. But volatility has come back into the markets, and this also makes tomorrow's trading day, along with your monthly expiry, a little bit more trickier.
Well, absolutely. Thanks so much for that, Agam. Tricky day tomorrow as well, and volatility is back is the key takeaway there. But let me quickly check on one more stock that we really wanted to cover. That one was Vedanta. All right, while we have Anushi miking up, I want to quickly try and understand from Akshay. Akshay, talk to us about what is your sense tomorrow expiry. Agam calls today as well as tomorrow's expiry a tricky one. What's your advice?
Absolutely, it's a tricky one because 22,000 is the pivotal level for the index. We are kind of, oscillating around those levels, but at the closing hours, it is slipping below the 22 mark. So the sense is that there is slum negativity or long unwinding happening in the futures and option segment. There is a good chance that at the lower end, 21,850 can be tested tomorrow. 22,000 is turning out to be a strong resistance, as I see a lot of call writing bets are being positioned at the strike. So if you want to take a directional bet, your stop loss has to be 22050 for tomorrow. The view is negative, and there is a good chance that Nifty can test or go below the 21,900 the way the data reads at the current juncture.
Well, testing 21,900, that's really one more takeaway, at least for us today. But let me quickly switch over. Vedanta was one of the other ones in focus. Slew of brokerage notes on the stock. Mixed views, some positive, some negative. Anushi is here with all of the takeaways before we take what our guests believe on Vedanta or their views on Vedanta.
Right, Harsh. As you correctly mentioned about the mixed set of reviews that we have been seeing for Vedanta, where on one side we have Nuvama rating the stock as buy, seeing about a 49% of an upside. This is on the back of a couple of reasons that the company management has cited. First is the proposed demerger to create potential value for the separate entities going forward. Also, there is the main focus continues to remain on the company's debt reduction plans, especially at the current level of about $3 billion over the course of next 3 years. They've also outlined an EBITDA guidance of about $7.5 billion by FY27. So that is also on the watch out for. Another couple of reasons that we should be focusing on is the monetization of their iron business. So that is on the cards as well. While these are some of the positives, we also have neutral ratings, wherein BofA has given a neutral rating, while Kotak has given it a sell rating, citing that the EBITDA guidance that they have given of $6 billion for FY25 seems too optimistic for the company currently. And Motilal also has a neutral rating and suggests that the debt overhang at the parent level continues to loom over the company until they reduce this forward. So these are some of the highlights that were mentioned.
Right. Thanks so much for that, Anushi. Let me quickly take it across to Deven. Deven, Vedanta, overall, what's your sense with regard to this one? Is it or does it continue to be a value proposition of sorts in this kind of a market, given the kind of dividend yield that it continues to offer, the kind of free cash flow it has, and the possible value unlocking that is expected from it?
So the entire commodity portfolio of Vedanta, be it ferrous, non-ferrous, that is white metal, I think the underlying tone remains absolutely very bullish because of the stronger demand scenario which is emerging, particularly because of the India being in capex mode. So to a greater extent, I think we remain absolutely convinced about the prospects going forward for the commodity space in general. And we believe that I think we are entering into a very structural bull run as far as the metal commodity space in particular. The oil and gas commodity too, along with, I think, is having a reasonably steadier performance to talk about from Vedanta side. Well, I think the bigger challenge, if at all, I think one wants to call it as, so on one side, the downside is limited in the stock price because the valuations have been moderated and corrected significantly, and they have remained at the level at which I think they're becoming very compelling buy proposition. The challenge out here would be that till the time they complete their entire restructuring of the group, I think till that point of time, I think the buyers will not be comfortable entering into this stock. That is what my understanding is. Having said that, I think as you go closer to the restructuring outcome, probably I think the market would start giving some better valuation de-rating to this particular stock. At this point of time, downside remains limited. For an upside, I think either you wait for a long time or maybe I think buy when I think you have got little more clarity at such point of time to time the market a little bit more predictably than what it is at this point of time.
Point taken. Deven, what about the debt restructuring on this one? Do you feel reasonably confident that they will be able to carry it out? Company of this size, this scale, having such strong promoter ownership?
They are profitable. They are generating cash.
Absolutely.
That is a positive, according to me. And that's where the lender will not shortchange the company or the promoter, particularly in this kind of a situation. Yes, they do need to have the restructuring of the debt, and for which they are doing the restructuring transaction, demerger transaction, which we are talking about. So that particular aspect is not ruled out. In my understanding, since the cash generation ability of the business is remaining absolutely strong and convincing, and which is sustainable in the period of time, I would think that the ability to manage the debt portfolio and getting it restructured or paid, I think will not be a bigger challenge for the group as a whole. So I would remain reasonably more positive on this particular aspect than worry about it, I think, at this point of time. They're servicing that well. That is a good, strong point, which I see it in the commodity business.
Okay. Well, some more stocks before we take in the closing strategies. We've spoken a lot about stocks which have corrected a bit today, and it's that kind of a day. What stood out very well today, aside of stocks like Bajaj Healthcare or a Dream Folks, which went up on that Motilal Oswal note, is Havells. It's up another 4% today on very high volumes relative to the few-day averages. And this is after the stock has had a good run in trade yesterday as well on the back of the upgrade from Goldman. So the stock has done really well the last couple of trading sessions. Akshay, any thoughts for somebody who went into a leverage long on Havells this week, has enjoyed 9% returns? In a market like this, good to take profits?
You can hold on to this stock. The reason being today, Havells has given a multi-year breakout, and this breakout has been seen at the levels of 1500, and this has happened after 2021. So a very strong breakout backed by volumes, and it's a positive trade on the technical setup. So I would say that even if someone is not bought, it's a trade worth going for at the current levels. The breakout happened at 1500, so your stop loss should be at 1480. It has stood out in a negative market, so I believe this has more legs to go on the upside. 1575, 1590 can be your positional or short-term targets in Havells. So recommend a positive view and continue to hold your buying bets in Havells.
Deven, what about Havells fundamentally? Because there's somebody who's talking about how seasonally Voltas, for example, in the month of March does very well. Maybe the pre-summer buying. Havells, therefore, because of Lloyd's come into that fray as well. Do you like these businesses?
Absolutely. I think with the more amount of money available in the hands of individual consumer for spending, higher amount of credit extension happening due to the availability of funds with the NBFCs and the consumer lending financial institutions, I feel that I think the white goods industry in particular will have relatively better thing to talk about, will have more predictable business to talk about. Havells, likes of Havells, Voltas, Blue Star, are some of the companies who have already actually shown two important aspects. One, they have been successful by bringing the products, I think, which are as competitive as some of the MNC brands are. And the second most important aspect is they have expanded the distribution reach far more systematically, so that I think their ability to end up increasing the sales in the business, sales, I think, would probably remain always more reassuring than otherwise. In my viewpoint, I think given the kind of busy season that we are talking about, that summer season that we are talking about, in which these companies are entering into, the next quarter and thereafter, I think would be relatively stronger quarters for most of these companies, including Havells. So whether the valuations justify that part, I'm not too sure. It would be individual company to company case. Maybe some of the companies are already quoting at FY26 expected earning. So to that extent, I think I may remain a little bit more watchful on buying something at an expensive valuation.
Point taken, Deven. Akshay, before I go on to the next piece that I want to discuss, quickly with regard to your BTST ideas.
It's a negative setup today in the indices. Most of the stocks are on a negative footing here. And, BTST really, I'm not very keen because the momentum is on the negative side. Really, if you're keen on BTST, the only stock which is standing out is Havells, which we discussed right now. And that's the only name which is coming up on the BTST list in case you are keen on the buy side. So 1529 is the rate. If you're carrying forward the trade for tomorrow, I see levels of 1560 plus. Keep a stop loss of around 1495 on this trade.
What if I give you an invert? Sell today, buy tomorrow.
Well, there's a lot of stocks today which get into this criteria, and you can have any pick as you choose because that's how the markets are going right now, a free fall in the markets. But if I were to name a stock in this, then I would stand with the banking name here because banking is taking a good beating as the way goes. IndusInd Bank trading at around 1446, a very negative setup. Shorts added, possibly I see a breakdown of 1420 happening soon. So an STBT candidate can be IndusInd Bank for a trading perspective. Tomorrow, 1410, 1400 can be tested on the lower end. Keep a stop loss of around 1475 on this trade.
Okay, so those are some of the names for you, but let me quickly take it to the Nifty Energy Index. And I want to point out that one is also taking a bit of a beating today, 2.5% lower. And if we can have the constituents there, what you'll see is largely all the constituents are in the red except maybe an Aegis Chemicals. Okay, so that one's probably in the red as well. There you go. So HPCL, BPCL, Oil India, Those are the three stocks. Indian Oil are the three stocks that I want to focus on, because Nuvama came out with a note earlier today, bearish on some of these. Unfavorable risk reward is what they call it. Devin, we've had a good run in some of these stocks. Your views, if any, with regard to this particular pack, what should one do, and how are you looking at valuations?
Well, I think, of course, the valuations have been re-rated, and to that extent, I think these companies are no more quoting cheap as they used to be at some point of time. Fortunately, in the last 2 quarters, they've had the advantage of higher refining margins, and that's where probably these companies have been successful in producing the financial performance which we are referring to of the last quarter. At the same time, the crude oil prices have remained relatively more steadier, so that also has helped them. As we talk today, I think the demand scenario continues to remain good for refining products. So that again, I think that again says that the business condition-wise, they are not deprived of, I think, on the business as well as on the margin front. My only point of view here would be that I think this business is linked seriously with the commodity nature of the crude oil. And that is where probably I think one will have to be mindful about, I think, giving extraordinary high valuation to this business. Second point, the point in consideration is about the foray into renewables, which they must and they should, which they are doing, which is absolutely, I think, well taken point. However, I think these businesses do take time to get materialized. And maybe even if they have started now, probably I think before 27-28 financial year, they are unlikely to see light of the day. That is what my take would be on the renewable side. So overall, one will have to be a little bit mindful about, I think, giving the premium valuation to them. Maybe the stocks have already appreciated. So most of the things are in price as I see it at this point of time.
Sure. So not really the most positive with regard to some of these, Devin, rather seeming a little negative there, which is in line with what Nuvama is also believing, and that's what markets are doing to some of those counters. Let me take it to Akshay as well. Akshay, I know bearish at least for tomorrow, but maybe in the slightly longer term, maybe a week from now, how would you advise anyone with regard to some of these on charts? How would you go about? What are the levels?
For the Nifty, well, see, this last couple of months have been more of a range-bound scenario for Nifty. It's been choppy all over the place. But one thing, which you look at the price action itself, 22,000 is showing fatigue signs for the prices. Time and again, 4 or 5 attempts have been made. The indices are not able to sustain above these levels. So I believe March month is likely to be a tricky month. There can be some bit of a long liquidation. Obviously, the FNO rollovers will give you a more clear sense as to how the picture is playing out. But just reading the prices, my sense is that the lower end of the band, which is roughly around 21,300, 21,400, from where this entire oscillation of the indices in the last couple of months is playing out, that's the base that can be retested in the month of March. So I would advise caution as you go ahead for the March series, looking at the broader price structure of the markets.
Sure. Akshay, I was rather referring to the Nifty Energy Index, and within that, some specific constituents, HPCL, BPCL, IOCL, and the like. Any of those names that you prefer on charts at the moment?
Look, today, the broader chart structure is still strong in the energy indices, just that today they have taken a beating, most of the names, if you see HPCL or BPCL. But I would be looking for buying opportunities in these names. BPCL is a very strong support base at around 580, 585. Similarly, this goes for HPCL too, which has a strong base on the lower end, somewhere around 490, 92 odd levels. So once these dips are retested, that's the swing lows from where you had a good bounce back, I will reconsider them from a buy. But here it's more about taking the trading buy, not buying from an investing view. So wait for dips. A slight dips makes it more good from the risk reward perspective. So I will be looking for buy opportunities in the energy pack, but at a slightly dip from the current levels.
Okay, gentlemen, we'll leave it at that. Thanks so much for joining us and giving us that perspective. We'll do a quick market wrap as well, just to show you how we've closed. About a minute and a quarter or a minute and a half left. But it's looked wobbly. In fact, it's weakened further as the day has gone by. The intraday of the Nifty would be interesting because we are now probably at the lowest point of the day today. So quite a bit of drubbing that we've taken. And look at this corrective move that's happened in the last maybe 25-30 minutes of trade. The market breadth would have weakened considerably as well. And let's get the heat map up right here. So looking weak, and get the heat map up. Hardly any winners, just 4 winners, but the losers have some very large cuts. I was trying to see which of the heavyweights have corrected. There is Reliance, which is down about a couple of percentage points. So this one is the core culprit. To be honest, Kotak Bank has some losses to itself, but essentially more losers, hardly any gainers. And just the contributors list before we get Harsh here, because there's no point talking about individual names. Almost everything is corrected. But just look at this. The 3 gainers, if you will, and bobbing between the red and the green. But the losers, Reliance, HDFC Bank, ICICI Bank, Power Grid, by extent of the fall that it has had. No surprise that we've had a terrible outing. Is this expiry-led? Can we recover a little bit? I think time will tell. Maybe global markets will also play a part here. But the mid-caps too, down about a couple of percentage points. Not a great day.
Yeah, closing at the day's low, Niraj. Is this a buy on dips? Not really sure, but that's a question for maybe tomorrow morning. But let me first start off with a few names. 2% down on both the Nifty mid-cap and small-cap as we have now closed. Let me quickly pull up a few names. Max Financial, probably at the top. Gainer on the Nifty mid-cap on a tough day of trade. Insurance again leading the pack. Mind you, this one owns Max Life. So that one's up 3%. PB Fintech is the other one up in trade on a tough day, 1% higher just about. Loris and Mazgon Dock is the other two which have closed in the green within the Nifty mid-cap. The small cap, or rather the mid-cap, the top losers, let's quickly take it first off to Vodafone Idea. That one has been in focus today, down roughly 14% at close now. Z as well in focus. That one also beaten quite badly. If we can pull up something like a Paytm, see where that one probably at lower circuit, 5% down. And Godrej Properties, if we can pull that one up, that's probably the third largest loser on the Nifty mid-cap index today. Among the gainers on the small cap, Aegis Chemicals, KEC, Tejas Networks, the 3 gainers. If we can quickly pull those up, see where they've closed off. There you go, 4% higher on KEC. Tejas 2.5% odd, and Godrej Properties also closing. Aegis Chemicals also closing higher. Among the losers, HFCL, Wellspun, and NLC India. Those are the top 3 losers on the Nifty small cap, at least what basis the data I'm getting. There you go. Those are but it's a tough day of trade we've had. And if we can pull up the advanced decline just to see where we've closed off at.
I marked it. It's looking very wobbly for sure.
Yeah.
And just before we wrap up the day's thing, if we can just get the NSE 500 or the BSE 500 losers and winners, just gives a great idea of where the pain has been and where stocks have done well. Rainbow Children is up about 13%. That's a very strong up move in the last 1 hour of trade. As also for Jindal Saw, I believe, up about 10%. So quite a good synopsis of what's happening at the broader end of the spectrum.
Yeah, but HFCL down 7 as well. So lots
as
of
is
pain.
Motilal Oswal and Delta Corp too.
Yes.
So pretty interesting moves there. But with that, it's a wrap on this leg of India Market Close from Harsh and me and the team that put this show together. Thanks so much for watching. Up next is Profit Insights, wherein we talk about a preview to what the GDP numbers could look like.